Well, welcome back to the show, the Seattle Eastside Real Estate Podcast. I'm your host, Dan Edwards, a managing broker of the Eastside Real Estate team. And our next guest is Shawn Stewart. Shawn Stewart is a loan officer and a loan professional for over 20 years. He loves being part of helping everyone enjoy that American dream of homeownership that we talked about. He works for Directors Mortgage and has been on and has an awesome team. Their number one priority is to take great care of their borrowers and business partners. Their company, Directors Mortgage, has a 98% customer satisfaction rating at rating. Now, just to put words out there, if they have 100%, they're lying. So 98%, that's really great. A plus rating with a Better Business Bureau and very, very competitive rates and pricing. Please welcome to the show, Shawn Stewart. Welcome.
Thank you. Thank you.
All right. Thanks for coming
Nice
on
to
to our
see you.
podcast. We really appreciate it. Now, here's the curveball. I'm going to throw one right out of the start. I'd love for you to share a holiday memory from the home you grew up in.
That's a good one. Gosh, I was about 5 years old and super excited about Christmas. My mom had kind of put the fear in us that, look, you've gotta be really good in order for Santa to come and see you and give you lots of presents. So for 6 months prior to that date, every day I was just, on my very best behavior. And Christmas came. It was one of the best Christmas. Family came over from out of state and just loved it. And I was
And
pretty
all
proud of my
because you were good.
I was pretty proud of myself for being really good for that time frame.
Was it like an
especially being a
epic haul that year or what?
especially being a 5-year-old little boy. I anything my mom needed me to do, I was all over it.
On it. I wonder how long that worked for you. Like how many years that worked for her, right?
Oh, right, right. Shortly after Christmas, I was back to my devious behavior, but
That's awesome. Well, Shawn, our topic today is how big of an impact is kind of denied credit. Those get kind of frustrated with a credit situation. So, how big of an impact do credit scores have on purchasing a home?
credit has a huge impact on purchasing a home. In fact, with this pandemic that we've been going through, more and more people have lower credit scores. And it's interesting to know that it's very important to know that you should actually check your credit before you go and buy a home. There's a there's a credit reporting company for consumers called myfico.com. And I highly recommend before applying for a home to go and check your credit because even even 10 points could lead up to hundreds of dollars in higher interest rates and higher payments.
Okay. So, if you have low credit scores, what is the fastest way to improve them?
So there's a couple key factors in how you can improve your credit scores the most. Maybe you have a spouse or partner who has good credit, good trade lines, meaning good accounts on their credit report, and you can piggyback off of their good credit cards in order to boost your credits quickly. So basically how it works is as if you had those accounts yourself for a long period of time. The other is um, on your credit cards, if your balances are higher compared to the limit, paying those balances down to 1%, you could see a 50, 75, or 100-point increase in your credit scores by doing that. And that's why my FICO is so important because if you pull your credit ahead of time and you know where those balances are, you could pay those down and you could pay them down before your lender pulls your credit and be in really good shape.
I've heard that you want to have a balance that is no more than 30% of the total card outstanding for the sweet spot. Like you're saying, you can pay it down just 1%, and you're going to have something. But if you have a line of credit that's $1,000, to keep it under 300 is kind of the sweet spot for keeping a good credit score. Correct?
And that is correct. In the mortgage industry, we want to see that you can handle your finances well. So having 30% utilization is a good place to be because that means that you're more inclined to you're making your payments on time. You're keeping your balances low. However, credit experts state that having a balance at 1% gives you 20, 30, 50, 50 more points on your credit score than being at 30%.
Oh, okay. So you mean 1% outstanding, no more than 1%.
1% is where you're going to see. So
The
so
best.
30%, yes, 30% of our credit score is credit utilization. It's our
Mhm.
balance compared to our limit on credit cards. And to get the majority of that 30%, you need to be at about 1%.
Okay. So let's pivot a little bit from loss of job. You know, a lot of people either lost their job or had their hours cut back due to COVID, um, and requested or received what they called was a forbearance from the mortgage company. What does that do to your credit score?
Well, if when you went into the forbearance, you were current on your mortgage, and let's say you weren't able to make payments for 3 to 6 months, as long as you were current going into the forbearance, your credit scores, your credit will not be hindered. There will not be late pays that will show up on your credit report. So it doesn't, as it should, it doesn't have a negative impact on your credit score. You're still in good shape.
Okay. So of course you get current though after coming out of forbearance, correct?
It's important that once you come out of forbearance, that you start making payments on time. In order to qualify for conventional financing, you need to have at least 3 payments that you've made on time in order to get the financing. If you're doing FHA financing, you need to have 12 months of on-time payment history in order to do
After you come out of the forbearance, correct?
after you come out of the
So after you
forbearance.
come out of forbearance, for conventional financing, you have to be 90 days or 3 months, 3 payments before you can refinance or do any new moves. But if it's an FHA loan, it's 12 months, right?
That's correct.
Okay, cool. Self-employment. Self-employment, have there been any changes in loan qualifications for these times in the current environment now?
Yes, yes, there has. And, in being self-employed, I think the world of people who are employing people for jobs. Um, you know, I just think that that's just an awesome place to be. However, due to COVID, lenders have, started to restrict, the amount of income that they will allow or accept for, your self-employment. So back in the day, you could, you as a self-employed individual, you are benefited from, in hiring people in or you're benefited in being able to write off deductions. But now, a lot of those deductions that you would write off, lenders view that as just, not showing enough income, and therefore you may not qualify for financing. So that's something to talk to your accountant about before you apply for a home loan, because it has changed drastically from where it was before.
Yeah, it's taken me some time. I was a sole proprietor for a little while and then finally incorporated to where now I pay myself a salary and I pay myself a salary and that's consistent so that I can be in a position to qualify for loans rather than not, because that was obviously something on a real estate, you're commission based only, but you kind of got to get yourself in a situation where you can show that durable income and self-employment. You're right. A lot of people use a lot of deductions to limit their taxability, but then it also limits their affordability too.
That's correct.
Well, awesome, Shawn. Tell us a little bit about your mortgage company, your rates, how you guys serve your clients.
So I just love working for directors. I'm part of a team. We have an excellent team. There's a couple really good, newer products that we have that we're really excited about. We have what's called an earnest money back guarantee, and that program is really for to give sellers the ease of mind that if someone doesn't close their loan, that our company will give back to the seller their earnest money up to $5,000. We also have a program for borrowers that that make their payments on time, that we will give them cash back up to 10% of their monthly mortgage payment. And so if they turn around and they apply that 10% back onto their mortgage, they could pay their mortgage off, 5 to 7 years sooner. And
Wow.
this is no additional money out of their pocket. This is just by making their mortgage payments on time. Not to mention, we have a slew of other products that are available. We have, bridge loans, we have construction loans, we have hard money loans, we have conventional, FHA, USDA, VA, and very competitive rates.
Awesome. So that's Shawn. I appreciate the conversation. I think those are some great, timely topics. How do our listeners get a hold of you, Shawn?
So they could reach me at Shawn.Stewart at directorsmortgage.net, or they could call me at 253-230-2464.
Oops, we got a formatting thing on that, but 253-230-2464, right?
Yes.
Awesome. Thank you so much for coming on, Shawn. I appreciate it. Up next, after this short commercial break, we're going to welcome back to our show Mr. Doug Peterson of Get Priorities Straight. Come on back right after this short break.